Folsom real estate. It feels like it's in a bit of a standoff right now, wouldn't you say? The big question we're tackling is, how does a housing market, double its available inventory without completely tanking prices? Welcome to Time to Buy or Sell by Weichert, Realtors, Sierra Pacific Group. Today we're doing a deep dive into the Folsom single-family housing data for fall 2025.
Yeah, that standoff, that paradox you mentioned, that's really the heart of it. The quick takeaway, we've gone from what felt like a desperate famine for buyers to, well, maybe a controlled feast. But, and this is a key part, that feast is still being served at pretty much near peak prices. So buyers, have way more time, more choice than in recent years. But that roughly $800,000 median price, it's proving remarkably sticky.
Okay, let's pull the curtain back a bit on the actual numbers, the stats showing this shift. We found active listings for single-family homes. They've climbed, something like 50% year over year, a huge jump.
It's significant, yeah. That puts us around 250 homes actually available, which, like you said, is basically double the inventory we saw just 12 months ago.
Wow, double.
And that kind of volume, it fundamentally changes the playing field for you, the buyer. It's pushed our months of supply, that's basically how long it'd take to sell everything currently listed, way up. We were at a frantic 1.6 months last year now. It's closer to 3.0, maybe 3.6 months.
Okay, 3.0 to 3.6. That's moving towards balanced,
Yeah.
right? But not quite there.
Exactly. It's a massive move towards what we'd consider a truly balanced market, which is more like 5 or 6 months of supply. We're not there yet, but the direction is clear.
Right. But hang on, inventory doubled, yet you're saying prices are still holding near that $800,000 median. Why hasn't that huge injection of homes caused prices to, wobble more?
It's mostly inertia, I think. And remember, we're still seeing year-over-year appreciation, about 6%, maybe 9% compared to last year.
Yeah.
So seller equity is still strong, even though that rapid price growth has definitely leveled off recently.
Okay, so the growth stalled, but the level is high.
Correct, but the pace has absolutely shifted. That's undeniable. Homes are sitting longer. The median days on market, or DOM, is stretching out. We're now seeing 22 to maybe 35 days median compared to under 3 weeks, like 18, 22 days just a year ago.
That longer DOM.
Yeah.
That's got to be the buyer's new best friend, right?
Yeah.
So if I'm a buyer listening right now, what specific opportunities are opening up? Where's the leverage?
Leverage is definitely back. 2 key areas: choice and negotiation. First, choice. Just having more homes to look at reduces that pressure cooker feeling, and the competition, it's easing. We saw about 37% of homes selling above the list price last year. Now, that figure's down to around 28%. So bidding wars are becoming much less common. They're more the exception now, not the rule.
And probably the biggest sign for buyers, price cuts are becoming normal again. You found, 41% of current listings have already dropped their price?
Exactly, 41%. That tells you sellers are adjusting expectations. So buyers can now actually pursue concessions. Things like asking for help with closing costs, or maybe a rate buy down, or demanding certain repairs get done, things that were pretty much off the table a year ago.
Right, you wouldn't dare ask last year.
No way. And an important point for move-up buyers, keep an eye on the high end. That $900,000 plus luxury segment seems to be softening the fastest. That's likely where you'll find the best negotiation environment right now. Sellers in that range are probably anticipating longer sales times, maybe 60 days or even more.
Okay, so that makes sense for buyers. Clipping the coin, what about sellers? They can still succeed, obviously, but it sounds like the strategy has to be way more dialed in now.
Absolutely critical. It boils down almost entirely to pricing correctly, right out of the gate, because the market is, frankly, ruthless about overpricing right now. Yes, the average sale still closes near 99% of the list price, which suggests overall discounting isn't massive if priced right. But the overpriced homes, they're just sitting there. We looked at some active unsold listings. Their average time on market was something like 73 days.
73 days, wow.
Wow.
That's a long time compared to the median. That's the warning sign right there.
It absolutely is. It just proves that with more inventory, sellers are competing much harder for buyer attention. If you're overpriced, buyers just move on to the next option.
So if a seller needs to move relatively quickly, what part of the market is still moving fast? Is there a sweet spot?
There is. It's generally that entry-level to mid-range segment. Think well-priced 3-bedroom homes, especially those maybe under $700 up into the low $700. That remains the most competitive part of the Folsom market. If they're priced sharply, those can still go pending pretty quickly, maybe 1 to 2 weeks.
Okay, so entry level is still relatively strong.
Yeah, relatively. But high-end sellers, going back to that $900 K plus range, they need to be mentally prepared to potentially concede maybe 2% to 5% off what they might have hoped for at the absolute peak.
That segmentation totally makes sense.
Okay.
All right, so looking ahead, the rest of 2025 Q4, what's the short-term forecast looking like for Folsom?
Well, first, we have to factor in the standard seasonal slowdown. Things always cool off a bit towards the holidays, so expect prices to be generally flat or maybe dip slightly. I'd guess maybe 1% to 3%. Nothing dramatic.
Okay.
Days on market will likely continue to stretch out. We could see that median cross the 40-day mark. But look, this feels like a soft landing. It's not a crash scenario. It's more like the market normalizing itself after those crazy, unsustainable years of ultra-low inventory we saw in, 2021, 2022.
Normalizing. That seems like the key word. Okay, so here's a final thought, maybe a dilemma to leave you, our listener, with. Considering this new balance we've discussed, this push and pull, how will those competing forces, this still high interest rates versus this much higher inventory track down, how will they ultimately dictate which market segment sees the biggest price adjustment by the end of the year? Will it be that more resilient entry level, or will the softening we see in the luxury tier become more pronounced? Something to think about. And of course, for specific local advice tailored to your situation, or just to find out what your home might be worth in today's market, give us a call. The number is 916-619-1971. Or you can always visit us online at wrspg.com.